Welcome to Software Spotlight, your front row seat to the latest innovations in software for small business. I'm Michael Burnswide, your host, and each week we are joined by executives at leading software companies to get an insider's perspective on the emerging technologies, business strategies, and market trends shaping the future. Tune in to stay ahead of the curve each week on leveraging software to boost productivity and growth in your business. Be sure to visit our website, softwareoasis.com, to access our free weekly software newsletter and sign up for our upcoming 2024 webinar series. Today, I'm excited to say that we're being joined by Sean Tepper. He's a software project manager and entrepreneur who shares his knowledge on YouTube, covering topics like stock investing, business ideas, marketing, and software development. He first taught himself to code in college before leading engineering and project management teams at various startups. Sean enjoys building products and providing practical tips for aspiring founders on how to cost effectively validate ideas and turn business concepts into reality. So, with that, Sean, welcome to the podcast.
Hey, Michael. Thanks for the invite.
Wonderful to connect with you today. And I've been quite honestly on a personal level following the solution for some time, and it's really exciting what you and your team have put together. And I was hoping we could peel back and take a little bit of a look at the journey. So I was hoping you could give us a little bit of background on yourself and what led you to start Tykr.
Sure, you got it. So, my background is about 20 years in tech. I built my first business in the 2000s. It was an agency, and we built a lot of software and websites for small and mid-sized businesses. This was through the recession, so I didn't make like any money. It was a volume game where we brought in a lot of projects, completed those projects, got them out the door. Now, in the last year, 2010, we did start bringing on some bigger brands, and a larger agency did approach us and say, "Hey, would you merge with us?" And at that point, I was really looking for a change. I was not in love with the service business any longer. I respect it, but I wasn't passionate. I'm like, I want a SaaS business. I was looking at Salesforce, Mailchimp, Netflix, and I'm like, I want that. That's the ideal model.
Neat.
So anyway, went through the merger. It wasn't like a big check was written like, hey, here's $1 million. You can go do what you want. It was none of that. It was all debts and liabilities wiped clean. Service businesses, if you don't already know, they don't have a big exit multiple because they're very liability intensive, a lot of payroll.
Sure.
So went through the merger. I knew I wanted to create a SaaS, didn't have any great ideas. So path of least resistance, let's go do consulting for large corporations. So I got into project management at that point. And some of the organizations I worked for include GE and Kohler, both great companies, make great products. And I did start a few businesses in parallel, a few tech startups, and mostly failures, but learned a lot. And I also got into investing around 2011. But I started with angel investing in private tech companies. Made some money, lost some money, but didn't have any big wins. Brought me to 2015. And I'm like, I could be swinging for the fences here with angel investing for the next 30 years. Like, I got to change this. So I turned to Warren Buffett and Charlie Munger, and I'm like, these guys are able to beat the market consistently. And I know they're not gambling men. They do not use emotions, and they do not use feelings. So what does that tell you? That tells us they're using some sort of logic to start their process with picking good businesses. And I'm like, if they're doing it, I can figure this out. I can reverse engineer this. So I went down the YouTube rabbit hole, read as many books as I could, and I was able to find a guy by the name of Phil Town who did provide some of the calculus in his books, put it into Excel, added my own flavor. I wanted to gamify this system into like a red light, green light decision making process so I don't make bad decisions. I don't want to buy bad businesses and lose my money. And he teaches you should be making 15% or more in the market. Warren Buffett, he can make 50%. He's talked about that if you were managing $10 million or less, he could make consistently 50% of the market. So I'm like, all right, let's do this. Put it into Excel. Point system of 0 to 100. I'll provide a demo here in a little bit, what Tykr looks like. But over 4 years, made returns between 15 and 50%. And this brought me to 2019, and I started sharing this Excel sheet with a few other retail investors as well as an institution. There's a family practice I shared it with, and everybody was like, hey, when are you going to turn this into a software so others can use it? I'm like, all right, I've got a SaaS idea 10 years later. And it's like overnight, here we go. It took about a year to build the first version. We went live in 2020. It took about 6 months to get the first paying customer, but I knew that because I've been building tech for a long time at this point. Your idea when you launch a tech is not to get customers or paying customers, is to get people on the platform. In return, you want feedback really fast because you want to make the tool for them, not for me, essentially. So then, yeah, it's been this journey of just iteration, making the tool better. And now today, 3.5 years later, we've got we just crossed 9,000 customers in about 50 countries. And the model, so everybody knows, Tykr is a stock screener, an educational platform all in one. It's not a broker. You still need to use, like I use TD Ameritrade, you can use Robinhood, you can use Interactive Brokers. That's where you buy and sell your stocks. You need Tykr to understand what you're doing. You're not buying bad businesses, and you're making wise investment decisions. And it's all based on value investing. So it's not about trading, it's all about smart investing, but looking for those big returns that are between 15 and 50% is what we tell our customers. That's what you're aiming for.
So it's almost the opposite of, day trading or, buying
Yeah.
and selling, lots of stocks very quickly. It's really more of
Yeah.
a buy and hold, but buy and hold the correct products.
Right. We phrase it as not just buy and hold, but buy and buy more. It's the discipline of treating it like your cell phone bill or your mortgage or your rent. It's like, or your energy bill. Like you have to be investing a percentage of your paycheck every month. That's when you really build your wealth. I won't go off on a tangent here, but there are investors in our community that are very new. They'll buy a stock in month one, and then they'll wait three months. They'll wait 6 months. They'll wait 9 months, and then buy their second stock. You can't do that. That's lazy investing. You want to be vigilant, buying every month.
So just consistently buying,
Correct.
what you can afford each paycheck, each month, each.
Correct. And to be specific, we tell people try to get between like 15 to 30% of your monthly income should be invested. If you can't get that high, that's okay. Start small. Start with like $100, but work your way up. But if you can ride between 15 and 30%, I've got case studies. I tell you what, we're talking, I've got one on a janitor that become a multi-millionaire by simply doing that.
And let me ask you, just one detail that you mentioned there. You spent 6 months until you had your first paying customer. So, obviously you had an idea and a concept and something that, a lot of passion and entrepreneurial, energy that behind that. But what would you say to an entrepreneur who's started a SaaS company and they're in that initial year and
Mm-hmm.
they're trying to find product market fit, they're trying to
Yep.
figure out the model, and as you and I know, many businesses do not make it. um, in fact, the majority of businesses and startups don't make it. So what kind of advice would you give to an entrepreneur who's looking to get past that initial period and to overcome a lot of the challenges there?
Yeah, so you want to set expectations right off the bat. So, and then I'll give you tips, your audience tips here on what to follow through with. So, and I have statistics saved, but 92% of SaaS businesses fail in the first 3 years. And it's a big part of it is not the business being a bad idea or the business failing. It's the revenue is not there and the founders shut it down. So you got to think long term because it can take 3 to 5 years to find product market fit. There, you'll see the guru on YouTube or that success story that they are the minority. Like, oh, we launched a SaaS business and in 6 months it started achieving 1 million ARR. That is super rare. Like, it's a 3 to 5 year journey, and you don't want to put the weight on yourself. Like, if you're in that first year, put the weight on your customer, but in a good way. You want to go to them. You want to be talking to customers, if not every day, it's every week. Get on Zoom calls. And if you don't have paying customers, that's okay. Give it away for free, but get on Zoom calls. What do you like? What don't you like? Use the mom test. If you ever read that book, it's all about asking questions, not about what do you like about our product. It's asking questions such as, what products do you currently pay for and why? Why do you continue to pay for it? Because if you can get inside their head, okay, so that's why they're spending money month over month or year over year. We can do that. And you do that with one person, 10 people, 20 people, 100 people. That's when you can put your business on a laser focused path. But it's your first year is that. Like, I'll tell you what, the first 3 years of my business were that interviews with customers. You got to think long term and realize that it's not the business that fails, it's the business founder or owner, they give up.
And that's so interesting. Obviously, connecting directly with the person who's going to be using your solution.
Mm-hmm.
While you built a solution that you knew worked for yourself, that's only half the battle. And a lot of the
Right.
best products do come from you know innovations that were created for being used internally within an organization.
Yeah.
A great example of that would be Slack. That is
Yes.
yeah, I mean that's a
Mm-hmm.
solution that was
I love that
developed as an
story.
internal tool. And for anyone that's listening, definitely shall I say, Google that story, and it's a good one. But at the end of the day, clearly, reaching out and speaking to your customers, whether they're the individuals using your product,
Mm-hmm.
or others in the industry, and asking for help. I think it's
Yeah.
so important, and finding mentors early on that can help you, level up and get your
Right.
growth trajectory in the right direction. I think that's something that's so interesting, and I've even found that with scaling Software Oasis. A lot of times, individuals are more than willing to help, and sometimes it's just a matter of reaching out and asking for help
Asking.
to partner, or figure out what the right path forward is. So that's
Yeah.
really interesting.
Mm-hmm.
um, so I guess the other question that I had in terms of reaching out to your customers, and this might be a great teachable moment, as
Mm-hmm.
far as getting on those calls with different people that are using your product, what type of messaging, like how do you get individuals on the Skype calls with you? What would you recommend? What's been successful?
Well, what I found is you kind of find people that are, they're kind of interested in what you're doing. Like, like we serve the retail investor, so stock investing, a lot of people are into that. So it's not too hard to find that people. But let's say you're a little more niche and you're into like, logistics for small and mid-sized businesses. You kind of narrow your market, but you want to reach out to people and be like, hey, can I get on the call with you? Could I set up a Zoom for you, half hour? I'm going to get your feedback. We're trying to solve some problems in this industry, and I'd love your feedback. So kind of use that phrasing. As soon as you put it that way, you're not trying to sell anything. Like, you honestly want feedback, and let them know, like, hey, I want you using this tool, and I'm not going to charge you anything. Again, I want your feedback, but we want to solve problems, and the only way, and I always say this, is the only way we can get better is getting help from our customers, our audience, because we can't do it ourselves. And if you position the language that way, it's not selfish, it's very collaborative, and most people are receptive to that. We even do that in our churn sequence. If people leave, it's automated, but it says, first off, thanks for giving us a try. Second, the only way we can get better is by making improvements to the tool. What can we do to make the platform better? Just lean into humility. And a lot of people are like, okay, so maybe it's not the thing right now, but here's what you can do better. I tell you what, this is going to be a tough pill to swallow, but you don't want the good feedback all the time. It's like
Yeah,
80-20 rule. You want 80% of your feedback, you want the bad feedback. Like, I can handle the pain. Let me know what we got to do better. The 20% that's like, hey, it's the best thing I've ever used. It's like, well, that makes you feel good, but doesn't make a better platform.
absolutely. And I'm sure you've had a lot of aha moments when you were speaking with some of the customers early
Oh,
on.
yeah,
Yeah, and that probably helped you figure out the right roadmap and the right direction. From
100%.
Now, from where you originally started at a high level to where you are now, um, can you bullet point the big differences between what you thought the market wanted versus
Oh,
what the market really wanted?
so I wanted a tool that it was more analysis heavy and allows you to get 15 to 50% to really beat the market. So I started with marketing languages that was like beat the market, get bigger returns. And I tell you what, there's some people out there, even on Twitter, that really lit me up like that's impossible. And they're naive for thinking that, but they were right in the fact that that's not the language we need to use. What we learned is what people really want. It's not about getting rich or building your wealth on autopilot or beating the market or beating professionals. Like that stuff we can all do, but nobody cares about that. Well, I shouldn't say nobody. The majority of people don't care about that. What they care about is one word: confidence. They want the confidence to do this on their own. If they can rest their head on their pillow at night knowing they bought really good businesses and they avoided buying bad businesses, that right there, that is the touchdown feeling the majority of our audience wants. So we just started leaning into that language, confidence, and now we're kind of using the slogan clear, confident investing, and people are like, all right, I want to learn what you're doing there. But as soon as we say beat the market, it's like skepticism and
Sure, sure,
people aren't
yeah.
sure.
People put
So
their defenses up, and to me, what's really interesting is, it sounds like you may have almost been thinking more of a "we're going to show you how to figure this out" versus you've confidently provided a formula that helps them walk through the paces of picking the
mhm,
correct
right.
stocks confidently.
Yeah, and so and your audience knows, we're the only platform on the market that's open source with a calculation. So we do tell people like when they join, they can go to our calculations. We got Tykr.com, which is the front-facing marketing site. It's got a blog and all that good stuff. But there's articles that walks you through how to invest and step by step, but also shows you the calculations behind Tykr. And we tell people if you really want, go create your own version of Tykr. You don't have to use us. You can go create your own. However, we'd love if you stay with us. And just by kind of letting people know you can go create your own version, it kind of removes the barriers like, okay, these people really, they want to help you out. So it's kind
Yeah,
of like what Volvo did. I think it was 1959, where they had the patent on the 3-point harness for the seatbelts, and they could have charged a fortune. And they're like, we're just going to give the patent away. Like it's our patent, but just
yeah.
put it in
Safety is
your
so much more important.
exactly. And we kind of look at it the same way. Like we would rather see people investing wisely instead of like trying to trade some meme stock that's going to be hot for the next 15 minutes and then go bankrupt a year from now, which
So it's yeah,
people get involved in that. And I had a guy, I won't go off on a tangent here, but I've had people
sure.
come to me and say, I invested in this marijuana stock and I thought it was going to the moon. And now it's like almost out of business. And I'm like, should have been, sorry, should have been using Tykr. So,
And it's interesting. It's not like you're saying we have the secret sauce or the
no,
secret formula like Colonel Sanders with KFC. But
no.
at the end of the day, you're really very open about sharing where the numbers come from, what they're all
Mm-hmm.
about, and how you arrive
Yeah.
at what you're arriving at and where the answers come from. So I think that is very
Yeah.
confidence boosting. Um, can you walk me through, like, from when someone gets started with Ticker all the way through to the point where they're ready to make their initial investment, what
Yeah.
that journey looks like?
You got it. So I have to give some credit here to previous company I worked for, Kohler. What they do is again they make great products, but what they really emphasize is creating a gracious experience from A to Z. So it's got to be every email, every phone call, every touch point of customer service, usage of software. It has to be a gracious experience. And a lot of entrepreneurs, they don't go to that, they don't go the full 9 yards to really make that happen. So, and I push our team like everything, every email, every touch point in the software. If you can get from A to Z with 5 clicks, how do we do it in 4? How do we do it in 3? Make it better. And we really emphasize that. So in our onboarding, we really emphasize creating a welcoming, gracious experience. People join, they get their welcome email. You made the first step, congratulate them, make them feel pumped. Let them know what they can expect next. I'm big on threes and marketing. If you can break things down in simple terms, like here are the next 3 steps you should be taking. We break that down, and then we send them a new educational email over the next 25 days, teaching them something new about investing. And we also give them an option if they want to just skip it, they can all read them all on our blog.
Okay.
So, I want to binge it right now. Great, go do that. you know, so it's that experience. So over the course of a month, you've got high touch education, nothing selling. We just want people investing with confidence. And then our model is 14-day free trial, no credit card. We want people test driving the car with like least friction as possible. And then after 14 days, you can upgrade yourself. You can add your credit card from there. And we do get it like that. Any listeners out there that are creating a churn, or I'm sorry, creating a SaaS, and you want to reduce churn and really increase onboarding, like create that gracious experience. I like the no credit card required. Get them in, because if you let the platform and the experience do the talking for you, they will add their credit card on their own. So that's kind of the experience of
Right.
our
And it's
platform.
so interesting because at the end of the day, where you sit is so atypical for most financial tools. Most tools are really, trying to make a cut of the investment, or
Mm-hmm.
trying to lead a customer down a certain path, and Tykr is exactly the opposite. It's really trying to impart knowledge and help people make better investment decisions with knowledge.
Right on. This goes back to the confidence thing and people doing it on their own. Like, and everybody can. Like, I've got case studies upon case studies of people who they've never run businesses. They've never worked in the world of finance. You don't need to. Like, one of my good buddies is a professor in university, and he uses the phrase, like, you don't want to use $20 words. Don't try to be the smartest person in the room. Just speak to somebody like you're having a beer, or if they're not a beer drinker, like you're having a cup of coffee,
Yeah,
and that makes you more relatable. And we really lean into that. Like, we're not like all the financial acronyms and terms, we break them down in simple terms. Here's what they mean. And we still, so you guys know, we still recommend working with a financial advisor if you're into a point in your life where you like sold a business or sold some real estate or inherited capital from a loved one. You don't want to do anything stupid with a large chunk of change that just hit your bank account. Like, you want to put some protection in place. And we say, hey, go to an advisor. But if you're in wealth building mode, not wealth protection mode, wealth building mode, which most people are, you want to be using Tykr, because that's where you put your foot on the gas and really accelerate with those bigger returns.
sure. No, and obviously tax strategy and other,
Yeah.
strategies for diversification and all of that
Yeah.
are many times best handled by an investment professional.
Right.
So the other question, as far as the, not to get into the weeds, but the tech stack in terms of
Let's do it.
Tykr, can you talk a little bit about what enables the capabilities and how you've built the tech stack?
Could I share with you the MVP journey? It's kind of funny, and then we could.
Yeah, no, that would be really fun.
So
Sure.
this will be a good tip for anybody creating a SaaS: is you don't have to create the home run product. Well, you shouldn't even try to right off the gate. So I invested like 30 grand into an MVP, which was built with like PHP and MySQL, like 2003 called and want their software tech stack back type situation.
Yep.
It's like, but it was enough to get like a product out to people to start getting feedback. And then you start getting feedback and you say, okay, where can we go from here? Now, that was version 1. Version 2, we made a mistake. I kind of brought on a team of people, and they pigeonholed us with, we were using the same stack we use today, but we pigeonholed ourselves into an architecture that could not expand and add new features. We went to Node.js and um,
Sure.
MongoDB backend, which was great. But again, we got into a mode where we needed to add more features because customers were looking more features, more bells and whistles, more data. And we spent a year going from V2 to V3. I was so upset, but it is what it is. But we went to V3, which is a totally different design layout, but allows to add more menu items, more buttons, and still keep the efficiency. I'm big on efficiency from getting from point A to point Z. I want the least amount of clicks possible. Apple is very good at that. Anybody who uses Apple products.
Sure.
So V3, it took about 3 years to get V3, or since it was like literally a year by year thing. Year one was, that was version one, year two, version two, year three, version three. It's like we could have just skipped. We could have been so much further ahead if we would have not
Yeah.
done version two. But
And the reality of it is, in the journey of software development, you can always spend more money, and it'll always cost more and take longer than you ever expect.
it
That's
always
just
does.
reality.
Yeah.
It's just the reality. And obviously, a lot of the no code, low code tools and
Mm-hmm.
you know preset front end and back end, a lot of that didn't exist when you
Right.
were starting out. So
Right. Yeah. Yeah. And I got to share something else too. Is the team I started with, it was, and I've managed talent from all over the globe. And this particular team from India, I've worked with them a little. Like they're able to build websites, but a SaaS, it was out of their capabilities. They could not build payment systems with like custom payment systems with PayPal and Stripe and do like upsells, downsells. Like it was so hard for them. I moved to another guy that I worked with before. He was barely able to make it happen. The third team was they were able to do version two, and then version three they were able to execute. And we use, just this is a good tip for people creating SaaS business out there. Use a system like we use Paddle. Paddle allows you
sure.
to do sales all around the globe, handles the taxes for you automatically, and can do what's called parity pricing, which is you see the pricing of, like, you're in India, you see rupees. If you're in Germany, you see euros. And you can even adjust the prices a little bit too. So for example, somebody in India, they're not going to pay equivalent to $99 a month. That's too expensive. So you reduce the prices per country. It's really slick. I think ChargeBee is a competitor.
Yep.
But that's where you
Very.
want to go, right? Don't raw dog it and go with like PayPal or Stripe. You're going to create problems.
Yeah, no, absolutely. And interesting side note, they were actually a startup, or either Paddle or the company that acquired them was a
Profit well.
startup right here in Boston, which is where we're located. So,
Yeah,
and I think now
nice.
they're in England, but absolutely a market leader in,
Yep,
pricing and all of that. So
they are
fantastic.
one of the best decisions we made from a SaaS standpoint. They're awesome.
Yeah, in terms of intelligence,
Yep,
unbelievable.
yep.
So, yeah, no, that's a really interesting journey. And if you were to speak to some of our listeners that may be looking at other solutions in this space within the market, can you bullet point for me, what differentiates Tykr from some of the other solutions that people may
Sure.
have on their plate that they're considering?
Absolutely. So Ticker's biggest competitors would be Simply Wall Street and Seeking Alpha. And I always tell our customers, I will always give rave reviews of our competitors. So, and if you don't want to use Tykr, go use Simply Wall Street or Seeking Alpha. They're probably, Simply Wall Street's probably a little more geared for beginners. We're probably the best for beginners. Like, we really are simple. Second place would be Simply Wall Street. Third place, Seeking Alpha. But Seeking Alpha has a whole bunch of content. It's unbelievable. They're probably best in class there. But how we're different, number one, we're open source, right? Our calculations. You want to look behind the curtain, you want to do the math in Excel, or go create another platform on your own, do it. Like, that's how we're different there. Number two, you can see my portfolio. When you join, people can see the stocks I hold and the percentage of allocation. And no other planet, like, or platform, their CEO or founder, they don't show their portfolio what stocks they hold. So what it does is it gives people like a confidence boost. They know kind of what stocks to aim for in the beginning. Okay, so if Sean's investing in this, it's probably not a bad business. It's kind of the framework. The third reason is I always tell people, don't even listen to me. Like, I could talk about Tykr and stocks all day, but don't even listen to me. Go to Trustpilots, where our Trustpilot score is a 4.9 out of 5. We're the highest in the industry.
That's fantastic. And at the end of the day, I mean, for me and probably for a lot of our community listening, having a solution that they can confidently, go through their investment strategy where, at the end of the day, most people have busy lives. They have a lot of things going on. It's probably not the hardcore focus of where they're spending
Mm-hmm.
90% of their day. And the fee to get started is almost a no-brainer. I mean, at the end of the day, a lot of solutions and a lot of other areas are super expensive, or
Mm-hmm.
as we mentioned, a percentage of your assets, which is a completely different model. But I can hear a lot of our community saying, Michael, Sean, show us the solution already. Would you mind taking us for a
Sure.
quick peek at the dashboard
Abs-
and how it works?
Absolutely. All right. So here, jump into share. Give me a second.
And it's interesting because in the early days of podcasting, everything was just audio.
Mm-hmm.
So obviously, being able to see a visual, well, like they say, a picture is worth 1,000 words, right?
Exactly. Can you see Tykr? Okay.
Yeah, no, that came up just fine.
Okay. Yeah, I'll kind of run down the menu here. I won't go too much in detail, but the first thing you'll see in the web app, we have the mobile app, iOS and Android, coming out in March. It'll be a very similar experience, but there'll be a few more additional features, such as like a educational feature inspired by Duolingo or Babbel. Learning modules that'll kind of swipe right, swipe left type deal. Really helping beginners. Can't wait for that. We'll also have like a community feature inspired by Instagram, and then a point system kind of inspired by like fitness apps to keep you on track daily. And so you guys know, Tykr does a lot of the heavy lifting for you. We usually tell people you could spend 15 minutes a week and you're good to go, because it does a lot of the monitoring for you. But anyway, you've got your dashboard. That's the first thing you see here. You can customize this. There's a lot of things about this tool you can customize more than any other investing platform. You can arrange the widgets. You can add new widgets. Like here's an example. I'll add a new widget. Let's go ahead. We'll just create a chart for a stock. I'll put in a ticker here. Let's go hog. Harley Davidson, out of my hometown, Milwaukee. All right. So you've got these charts that show up, like you can see here. I've got Duolingo, I've got Target, American Express, Caterpillar, Adobe, got the S&P 500, the major index VOO. But anyway, you can kind of do whatever you want. There's other cool modules here like top gainers, top losers. There's also the top search stocks. You can see what other people are looking at. Then we have our stocks. This is the real meat and potatoes of the platform where all the stocks are. We've got a little over 30,000 and we're always adding more, but you can kind of create filters, you can create columns, you can organize the columns in any way, shape, or form, and then you can save those filters. Like here's a quick example. I've got a hidden gems filter I really like. It's United States stocks, USD currency. You can see the number went down to 147 from 30,000. Mid cap on sale. We'll get into the scoring system here in a second, but these are like businesses that could be really hot coming up. This is kind of a cool list. We also have ETFs, so if people want to play it a little more safe, you can look at ETFs and it'll show you, like here's an example of a semiconductor ETF, SOX, and you can see the stocks within the actual ETF and what weight they're at. You can see NVIDIA is at 10%. NVIDIA is just crushing it right now. And you can see how many stocks are within. You can see like the geography breakdown, which is pretty cool. We do have crypto, but you can't analyze crypto because a crypto coin is not a business. It's just a digital coin. So we have crypto so people can set alerts on it. And then we also use crypto because it's a marketing play. We do bring crypto traders into the platform, let them know like, hey, you could invest in crypto, which should be 5% or less, but you should probably be in value investing in smart businesses. That's where you're going to protect your money. And then other cool features within like watch list features. This is my favorite feature. You can see my watch list here, but you add stocks to it. And if anything changes with your summary score and margin of safety, you get notified. So if something happens to a stock, let's say it goes from green to red overnight, you can sell it before something really goes south on the business. Portfolio tracker is built in as well. We will soon be adding broker connections. So you can make trades in your broker and they automatically update within Tykr. You can also buy and sell stocks from Tykr. That's all coming soon thanks to broker connections. We'll be using a company called SnapTrade. Then you can set alerts on stocks, ETFs, and crypto all in one clean location. Like nobody's doing this. This is the most simple thing to do. And it just drives me crazy when I use other platforms. Like, why don't you make all your alerts in one clean location? But anyway, let's jump to a
Makes a lot of
stock,
sense.
right? Like
Sure.
just efficiency things. Like we're really big, just make it easy. All right, let's go check out Apple. You can see how this thing really works. Actually, we'll go to a stock that is on sale. This is a stock I hold in my portfolio. This is not financial advice, but we've got a really simple rating system. So stocks are either on sale, watch, or overpriced. You're looking for those green on sale stocks. In order to get there, to be on sale, you need a score of 50 or higher out of 100 and a margin of safety of 50% or higher. So if you check both those boxes, you got an on sale stock. Now the score, so you know it's the overall financial strength of a business. We look at numbers, which a lot of your business listeners and executives, they're going to get it. We look at revenue, we look at net income, we look at EPS, we look at free cash, also debts, liabilities, equity, and assets. And we want those numbers moving in the right direction year over year and quarter over quarter over 5 years. Now, if we can't get 5 years of data, like let's say it's an IPO stock that just went, live the last 6 months, then we get as many quarters as we can and do our analysis that way. The margin of safety, that's the upside potential. So you can see Fortinet is at $68 today. Upside potential, check this out, $343. That's the estimated fair value in 10 years. This is very much inspired by Warren Buffett, even his mentor, Ben Graham, and Phil Town as well. And then in the middle, if you want that little extra edge of confidence, we have the 4M confidence booster. So we teach our investors, you should not just look at the math. Investing is more than just math. You got to look past the numbers and you got to look at the business. So the 4Ms are as follows. You've got I'll actually show you here. We'll do a boost confidence. It walks you through as kind of a gamified experience to really give you that extra, like, yes, I should buy it, or no, I should look for something else. So the margin of safety is the first M. That's the math. The meaning is the business model, how scalable the revenue streams are. The moat
Right.
is how the business compares to other companies in the same sector and industry. And then the management is a track record of the CEO. Now, this is a framework that Phil Town uses, and it's really inspired by Warren Buffett. He's big on invest in what you know, right? Like, I know tech really well, but somebody comes to me with a pharmaceutical stock, and I'd be like, yeah, I'm not your guy. So that's the 4Ms. Here's the gamification. So you're going for a score between 80 and 100. If you can get there, which is very hard to do, like I've never gotten 100. Like this is very rigorous. You can get over 80 or close to, that's pretty good. Anything between 60 and 79 is moderate to only really move forward if you know about the business. And then anything that's 59 or lower, you should definitely look for something else. But let's cruise through this. You'll see what this looks like. So the margin of safety is done. Then we get to the meaning. We want to see how scalable the revenue streams are. Along with scalability, we look at profitability. So check this out. We're going to let AI go to work. We use OpenAI. We have the API version. So you can see it's starting to type. All right, we got a 7.5 out of 10, which is pretty good. We'll keep moving here. And we get to the meaning. How does this company perform against the stock market? We use what's called alpha, which is a term used in finance to see how a stock compares against the S&P 500 or a major benchmark. So over the last 5 years, definitely outperformed. And then we got the meaning. This is the Warren Buffett question, invest in what you know. So in my case, I know a lot about this company. I'm going to say very high. All right. Then we get to the moats. All right, so we had a previous version of the 4M tool, which was manual. You had to use Google to find out who are the other companies in the same sector and industry. It's a pain in the butt. But check this out. It does it all for you. All right, so it ranks against 4 other businesses in the same sector and industry, in 5 different categories. You got the summary. We can see that Fortinet is tied for first, so that's good. We get to the score. We can see they are second place at a 61. Then margin of safety, they are tied for first at 80%, looking really good there. Revenue scalability, they are first place at 7.5, and then alpha, they are at 0.95. So that's really good. They are pretty much first place the whole way, or pretty close. All right, we are almost done. We're on to management. So we're going to analyze management. Let's see what their track record is. You can kind of skim through the text here, gives you some nice highlights. Management impact 7.5. And then we'll get to the Glassdoor rating. This is really interesting. So I've done studies, and there's other people that have too. But check this out. Stocks with a company score greater than 3.7 have on average outperformed the market by 6%. And then stocks with a CEO approval greater than 73% on average outperformed the market by 8%. What this tells us is happier employees actually produce bigger returns in the markets. So we like companies that take good care of their people. All right, so this links to Glassdoor. You can technically skip this step and we'll calculate behind the scenes. But I like to click Glassdoor. It's a free platform. But we can see we get a 4.1, and Ken Z has got an 89 approval. So we are hitting those numbers. Let's go ahead and see what our final score is. Right, 85. Incredible. All right, there. That's a boost of confidence. Of again, not financial advice, but getting above 80. It's pretty hard.
And I like the long time horizon. I mean, I think that's huge.
Yeah, it teaches people that you shouldn't be like, there are people, you'll laugh at this. So when people buy stocks, their next question is, okay, when do I sell it? It's like, pump the brakes. You want to be in this thing for the long haul. Like, you want to spend a little time looking at a few stocks, making sure it's the right stock, and then you want to buy and buy more. Because when you take a step back, none of these businesses, especially good businesses, they're not going to have an off day, and they're not going to wake up on a Tuesday and say, hey, we want to slow down on our marketing, or we're not feeling up to speed with building relationships with other businesses. Like, that'll never happen. These businesses are always selling products and services, and that throttle is all the way to the floor, no matter what. So you can rest assured, like, the businesses you're investing in, they're most likely not going out of business or going south anytime soon. And if they do, this is another thing we teach our customers about stockpiling, which is the number one most important thing you will do in the stock market is you want the market to crash. I know it's completely contrarian, but it doesn't happen often. Over the last 100 years, there have been about 19 bear markets or recessions. An average duration is about 9 months. Now, there will be little pullbacks here and there, but you want the market to crash because that's when you deploy that dry powder, that available cash. And when it recovers, that's when you make massive returns. I tell you what, I wish I had a lot more money to invest during the recession of 2022 and part of 23. I mean, the amount of money would have made, it's ridiculous.
Yeah, and I mean, I think if you look at the fundamentals of the market, Warren Buffett, anyone else would tell you, over time, as long as you have the time horizon, the market goes in one direction.
Absolutely. And even Warren Buffett has said I've got so many favorite quotes of his, but he has said that he doesn't care if the market were to shut down tomorrow, because guess what? The businesses he invests in, they will not. He does not care about share price. He's thinking long term. Buy those great businesses and then keep buying more, regardless of what happens to share price, because the market's going to go up and down like waves in the ocean. And I train my audience, like, don't look at charts. Don't worry about charts, because that's the market. We don't invest in the stock market. We invest in businesses. And if you can have that frame of mind, that's when you make some really serious returns.
That's fantastic. And I really appreciate that overview, because it honestly gives, a very different perspective to, people that are watching the podcast to be able to see how the solution actually works in real life.
Right on.
So fantastic. And then I guess the other question that, from where I sit, that I'm wondering, as an organization, and where you're obviously presenting the solution to individual consumers that are looking to scale their portfolio. How do you go about acquiring new customers? Is it mostly word of mouth, or where do new customers come from?
So we do track data quite a bit, or as much as we can. That's one thing too. And you listen, like try to get your analytics in place, try to figure out where people are finding you. So we get a lot of leads from YouTube. I have a growing YouTube channel. I'm not a finfluencer by any means, but I'm learning what works with YouTube. So that's a big one. We also get leads from friends. A lot of people get referrals are big. SEO, I have really focused on SEO a lot. So we get leads that way, and then partnerships. Other businesses, we do work well with like other fintech platforms that have retail investors already in place, and then YouTubers and bloggers on finance. We've got an affiliate program you can join for free, and we pay like 30% reoccurring commission. So to people who want to create another revenue stream, they do appreciate that.
Sure. No, that's great. And obviously understanding, where your customers are coming from and referrals. I mean,
Mm-hmm.
that obviously speaks a ton about the value that your
Mm-hmm.
customers are receiving from the platform.
Yeah.
And overall, can you talk a little bit towards, the business itself and the company and the culture, and how you've worked to
Mm-hmm.
bring the team together to arrive at the solution that you have?
So now we do have a really good team in place. There were some relationships and partnerships. This is a lesson learned, is like when you partner with people, don't put anything in writing. I highly recommend this. Don't do anything in writing. Don't sign anything. Handshake agreement for at least a year to determine how these people work. You can talk big, you can be motivated for 5 minutes, but then you find out when the rubber meets the road. We had some issues with people that use the attitude that their customer is not always right, and the customer doesn't know what they want, and the customer is dumb. Like behind the scenes, customers are dumb, and there was a lack of maturity there. And I was like, oh my gosh, I've got the wrong people in the company. Well, fortunately, those people, I did not have to force them out; they just left. Awesome, like that was a blessing in itself. So I'm 100% owner at this point. There was a percentage split there. I was always majority, but now I'm 100%. And I have all contractors in my company. I'm actually the only person in the company that works that's from the States. I've got a engineering team that's out of India. I've got a UI UX guy that's out of Poland. He's very talented. Um, and then I've got my media team that helps out with a lot of media content. I've got a guy from Brazil, another guy from Kenya, and another guy from Bangladesh. So we're about a core team of like 6, 7 people. And then with a few more engineers from India, probably brings us close to 10 people. But yeah, all
Yeah, and I'll
contractors.
tell you, we're on the same page there. Every business that I've run over the
Mm-hmm.
years, and I think as a fellow entrepreneur, your first business will be your first in a journey of finding your way. But I honestly believe that you really need to find the best people, and
Mm-hmm.
no matter where they are, and it's so important to delivering the level of expectations that you have for your customers. And at the end of the day, if you can do something better, do it yourself. If someone else can do something better, outsource it.
Yeah.
Why not? It's a global marketplace, and there's a lot of brilliant people all around the world. I guess the other question that I had, if you were giving some advice to first-time founders or those looking to start a company, um, what are some of the key bullet point learning lessons you have over the years?
The partner one, again, don't sign anything. Handshake it for a year to determine who really wants this, because it's going to be work. Two is with tech now. I wish I would have known this platform, Figma. You can create clickable demos or prototypes without writing any code. And I would have done that journey instead of spending $30,000 to create an MVP. Do your MVP with Figma, which is like a design platform, again, that's clickable. and do that to get feedback, and then execute on your first software version. So I tell people all the time, do not do what I did there.
Yeah, don't hard code a solution to as your MVP.
Yeah,
Yeah.
right. And then I would also give you a third tip here is, again, put the heavy lifting on your customers. Be in the mode you're here to learn from them. And because in 99% of the time, the idea that you come up with is not the idea that makes money. You have to get feedback from customer, and your business is going to pivot. The design, the features, everything is going to change, and you have to be open-minded to that, because at the end of the day, it's like you are not paying you, your customers are paying you. So you got to be in business for your customers.
Neat. And if you were to look back, as to some of the recent, features that you've added to the solution, are there
Mm-hmm.
any that you're really particularly proud of that you wanted to highlight?
Gosh, I really like the score and the margin of safety, which was really what I created in Excel the first time. But to see that in place is pretty cool. I think the watch list feature, like, again, set it and forget it. You get notified if anything changes, so you could be off doing whatever hobbies you enjoy, and you get a notification like, oh, this business XYZ went south. But the new big one, we just launched around the holidays, which is the 4M Confidence Booster powered by OpenAI. That has really created a level of confidence for our customers, this gamified experience that makes them walk through. It's not just showing them a score, but walks them through the business. Customers really are receiving that. Wow. So far, that's the most proud thing. The thing that I think that'll beat it will be the mobile app. I can't wait for the mobile app.
Neat. And that was my next question in terms of new
Mm-hmm.
features that you have up and coming that you can share with our community. It sounds like the mobile app and
Mobile app,
kind
and
of the
that will include
community.
this. This is big because we're looking at. Have you ever read the book The Blue Ocean Strategy?
I have not, but I've
Okay.
heard of it.
It's a really smart model. I think it's just Blue Ocean Strategy now with it on there. But anyway, it's how do you find something that's growing really fast in another industry, and how do you apply it to your industry? You create a blue ocean. And I was looking at this was probably 3 years ago, or 2 to 3 years ago. I was looking at Duolingo. And Duolingo has over 600 million people using that platform to learn languages. Like, have you ever used Duolingo?
I have, yeah.
Okay. Babbel's pretty good too. They don't have it near the count. I think it's like over 10 million or something. Could be a lot more, but 600 million. It's like, wow, this business is really moving.
Mind
Well,
blowing, yeah.
did some homework on micro learning. It's like 90% of people prefer micro learning modules over full on courses. Now, Tykr does have full on courses, but only for people that really want to deep dive. It's not our main revenue driver, but it's just there as a nice to have and a need to have. But anyway, micro learning, I'm like, what Duolingo is doing with language learning, we need to be doing with investing. So that experience, this micro learning like experience of learning investing, will be built into the mobile app when it goes live. We're going to have like probably about 50% of the modules in place, like when to buy, when to sell, how to reduce risk, how does the platform work, but creating a short, sweet, to the point. Don't waste my time. Let me get up to speed as fast as possible. It is, like, I'm going to tell you right now, it's going to be best in class, and I cannot wait for that.
Really exciting. So let me ask you, for any of our listeners that are saying, I'm in, I want to get started.
Sure.
What is the on-ramp? How do they get started? What are the numbers? How does someone
Sure.
get up and running? And
Yeah, it's super easy. Go to tykr.com. That's tykr.com. And sign up for a free trial, 14 days, no credit card. If you like Tykr after 14 days, you can simply add your credit card at that point. Our price point is it's $15 a month or 99 per year. Most people go with the yearly because you save. It's about equivalent to saving 3 months there. But yeah, it's super easy. And when you get in, that gracious experience begins. Like, we're going to be sending you educational emails, getting you up to speed as fast as possible. So if you think you're a complete beginner and you have no right to invest in the market, you can think again. You're gonna be very, very knowledgeable within 14 days.
That's great. And, we'll leave a link in the show notes for anyone
Sure.
that is looking to get up and running. But this has been great. I really appreciate the time today and the journey and helping our listeners understand a new strategy for investing and how to pick the best stocks for their portfolio. Coming up on our next episode, we have Peter Wasmer. He's the founder of Pure Coastal Development Technologies and creator of ProValet.io, which is an automated service management platform revolutionizing efficiency and operations in the pool service segment of the market. Peter's lifelong entrepreneurial drive led him to transform yet another industry with his latest innovation and software solution. So be sure to tune in next week for that episode. And also be sure to visit our website, softwareoasis.com, to access our free weekly software newsletter and sign up for our upcoming 2024 webinar series.